Hey guys, my name is Daniel Zabala and welcome to my YouTube channel. In today's video I want to talk about volatility. Now what is volatility? So volatility is essentially how aggressively a stock or an underlying asset moves up and down in price. It's the extremes. And how extreme does that price of that stock or underlying asset move? So I'm going to show you an illustration here in a second. This is going to be a pretty short video. But essentially there's two big key takeaways from this video. There's two lines of thinking when it comes to volatility. So in the investing world, the less volatility, the better. When you're investing for the long term, we don't like volatility. Volatility is not our friend when investing for the long term. When we're talking about trading, whether that's selling premium in the form of selling stock options or even day trading, the more volatility, essentially the better. We love volatility in the trading world because the more volatility there is with an underlying stock or asset, that means the more opportunities that are going to be present. So with investing, less volatility is better. With trading, the more volatility, the better, essentially. So let's go to a diagram I drew and I'll explain it and you'll be able to see what I'm talking about. More often than not, if you're listening to financial professionals or individuals who are talking about investing, they're going to talk about how much risk you're willing to take. What they're talking about more often than not is volatility. If you assume more risk, you have the potential to make a higher rate of return. What they're talking about is that if you invest in a stock that has higher volatility, the higher highs and lower lows, the potential to make a higher profits there. If you assume less risk or a less volatile stock, the rate of return in general is going to be lower. So this is an example of a less volatile stock. The price goes up and down, or the extremes of which the price changes. Very smooth. This might be like your US government bonds as an example. This would be a more volatile stock. The extremes are much higher and lower. Higher highs, lower lows. Higher highs, lower lows. The average being the line in the middle. Okay, so to illustrate it on a graph, on this left axis we have percentages. These are rates of return, positive and negative, and this is a 5-year period. So on the black line we have a much more volatile stock. It's going to go up and down and up and down and down and might have negative returns at some points, and then have a huge spike up and down. And by year 5, from the starting point, on average, this dotted line represents the average, right? Which is approximately 16-17% rate of return. But in order to get that, you had big highs and low lows, right? High highs and low lows. Whereas this green line represents a very, very conservative stock or bond or some kind of investment, thinking long-term investing, right? You know, it's pretty stable. It's going to move a little, but not a ton. You might have about a 2% rate of return. So you assumed less risk, less volatility, lower return. Higher risk, higher volatility, higher return. This is talking about investing, okay, for the long term. In investing, the less volatility, the better. We don't like volatility. With trading, we love volatility. The more there is, the greater the opportunities. Now the last key takeaway point I'm going to give you is to keep in mind, when talking about investing for the long term, you might have two different stocks, right, as an example, that could have the same average rate of return over the long term, say 5, 10, 15 years, but one may be less volatile than the other. This is really important when we start talking about putting together a portfolio of investments, of stocks, bonds, ETFs, different underlying equities or investments, right? Because with investing, less volatility, the better. So again, you can have the same rate of return with less volatility. Just something to keep in mind as we talk about investing going forward. That's it for this video, guys. Thank you for watching. Please subscribe and share, and I appreciate you all watching. I hope this was a blessing to you and you got a lot out of this video. Talk to y'all later.